YouTube, what's going on, guys? Welcome back to the channel. Today I have some of the biggest news we're ever going to get in the Bitcoin space. Michael Saylor, he's the CEO of MicroStrategy, just said they bought another $200 million worth of Bitcoin. It's around 16,000 coins. They now hold almost 40,000 coins, which means they have about $500 million of Bitcoin holding that as a company. Now, a company can choose to hold cash, they can hold some treasury, and Michael and MicroStrategy have made the decision to hold Bitcoin as a hedge against inflation in the future. This is huge. It's a publicly traded company on the NASDAQ exchange. He's really putting his neck out there, showing conviction in the Bitcoin trade by adding a massive stack. Now, your first question when you hear this news, does this mean Bitcoin's about to rip? Are we going to pass 12K? Are we going to break new yearly highs? I'm going to break down what I think the news means, and I think there's a little bit more to the story that no one else has talked about. I'm going to be covering it in the video, so I hope you guys enjoy. Also, hit the like and subscribe right down below if you guys also think this is bullish for Bitcoin. I want to hear your guys' take, and also let me know down in the comments anything you want to see. It's been fun to grow the channel recently, and I got a lot more videos on the way. All right, let's get to this news. I'm going to break it all down, what it means for Bitcoin, where I think price goes, and what the bigger story is here. All right, so the news that broke this morning reads like this. Michael actually tweeted it out. It didn't come from CNBC or Bloomberg or anyone like that. Michael tweeted this. He said on September 14th, MicroStrategy completed its acquisition of 16,000 additional Bitcoins at an aggregated purchase of 175 million. To date, we've purchased a total of 40,000 Bitcoins at an aggregated purchase price of $425 million. So you might realize that this isn't actually the first purchase they made. It was back in August when they first announced this. CoinDesk reported on it, Block reported on it, Bloomberg, CNBC, everyone did, because it's a huge story. And they bought 21,000 Bitcoin then, and that was 250 million. He's now doubled down on Bitcoin. Now, one of the more important pieces of this is why they actually bought it. He said, this investment reflects our belief that Bitcoin, as the world's most widely adopted cryptocurrency, is a dependable store of value and an attractive investment asset with more long-term appreciation potential than just holding cash. That's what most companies are going to do so they can weather downturns, so they have cash when they need it. But Michael actually wants to be invested in Bitcoin, looking at global acceptance, brand recognition, and those seeking long-term store of value and its superiority as an asset class. So that's a quick explainer of the headline you probably saw, and at least you're clued in with the most recent news, but there's much more to the story here. And I'm going to break it down in two parts. These might not stick out to you at the very beginning, but I think that you need to know about them, and I also think they'll give you an edge about where we're going with Bitcoin and as an asset class. The first thing that stands out to me is how big this Bitcoin purchase is relative to the size of their company. Remember, MicroStrategy trades on the NASDAQ. That's a regulated US exchange right behind the NYSE or the New York Stock Exchange. It's massive, right? And this purchase is $425 million worth of Bitcoin. MicroStrategy stock is about $1.4 billion in market cap. So it's almost 1/3 of their company. I'm going to get back to that because it's pretty important, especially when you think about things like an ETF. Now, the second piece of this is a really fun one too. And it looks at if MicroStrategy is doing this, and they have now come forward and said they're buying almost $500 million of Bitcoin, how many other large companies around the world now are also going to consider doing this? It's a really important question. I'm going to break it down towards the end because I think thinking about it like that is going to give you an idea of where we're going and if companies are actually going to follow. I have an insight from a podcast I had a while ago, so stick around towards the end. But first, let's take a look at MicroStrategy's size, how big this Bitcoin purchase is, and how actually MicroStrategy might start trading like a Bitcoin ETF. So with a quick Google search of MicroStrategy, like I said, their size is about $1.4 billion. They trade on the NASDAQ, and this purchase is $425 million of Bitcoin. If you think about the ETF so far, it's been denied by the SEC several times. Companies like BitGo have proposed it. The Winklevoss twins have been proponents. But a Bitcoin ETF has just not passed. The SEC has not allowed it to happen. And if an ETF could happen, it would be massively bullish. So if this company now has $500 billion of Bitcoin, let's say Bitcoin appreciates a fair amount, all of a sudden this company that's a $1.4 billion company and 1/3 of it is Bitcoin, if Bitcoin continues to appreciate in their treasury and takes up even more of their company, something like half, or if Michael Saylor decides to buy even more Bitcoin and they start representing $1 billion of Bitcoin, all of a sudden you have something trading on the NASDAQ that basically is going to be tied to the value of Bitcoin. So I'm not saying this is directly an ETF, but I do think you can draw the comparison and say, look, if Bitcoin starts rising and they hold this much Bitcoin, that will play a large role in how this company is valued. And I imagine there's going to be a fair amount of people that if Bitcoin rises, they buy MicroStrategy because it's a very easy way to be playing Bitcoin, also be invested in a stock, and it's kind of a quasi ETF. Until the SEC actually approves a real ETF, this is the best option we're going to have. So MicroStrategy, in a way, is going to start acting like an ETF. We basically already have a Bitcoin ETF on a licensed US stock exchange. That's huge. It's a really big story, and I think it's something that most people don't consider when they hear about a US company buying Bitcoin. But we basically have it already. It's not a perfect ETF because it's not just Bitcoin. MicroStrategy is obviously a company, so there's more going on there with their valuation. But I do think part of their stock's performance now is going to be tied to how well Bitcoin does. A really interesting way to play Bitcoin there if you're a stock trader. Now, the second part of this video is even more interesting. MicroStrategy is the first public company to announce something this crazy. You have to realize this is still a pretty outlandish move. It's aggressive. Obviously, I agree with it, and I imagine you guys agree with it. Hit a like if you do. But it's a very aggressive move, a public company to be making this move, making it this public. He's willing to be wrong kind of out in the open. And it makes me think of a conversation I had with Ari Paul last year about hedge fund managers and investors jumping into Bitcoin. Obviously, for people that are already here, it's a no-brainer. You want to be in Bitcoin, you know it's going to go up, it's a store of value, it's probably going to outperform gold and stocks and everything else in the next 10 years. But for people that aren't here yet, it always sounds risky, it sounds unregulated, it's scary. Now, what happened a few years ago with hedge funds and VCs, and is still happening today with very famous investors, is a few people have to make the leap first. Meaning, the more risky VCs and the more risky investors and hedge funds and believers make that move first. And there's always a risk of investing with Bitcoin. Sure, you can lose your money. Sure, you can be wrong. But one of the biggest risks is actually your career risk and your reputation risk. Let's say you're one of the first hedge funds to invest in Bitcoin and it goes to zero. All of a sudden you look like an idiot. You're probably going to lose any investor money, and you're going to be looked at as a guy that took a ridiculous risk that was never going to work. But if 5 or 10 hedge funds and VCs start doing very well, make that number now 100 or maybe 1,000 funds are all invested in Bitcoin, it's doing incredibly well, the risk is now transferred onto the people who aren't invested. Because if Bitcoin does really well, and there's already 1,000 people that have understood that, and you're the one guy who doesn't, you're not invested in Bitcoin, all of a sudden the reputational risk is kind of gone. There's a lot of investors that already believe in it, so you're not the one guy who's going to look dumb if this goes to zero. Here's that clip because it's such an important conversation, and I think it's going to get into the final point and why I'm making this video. I expect a lot of other companies to follow suit. But here's this clip. It's from the podcast. You can listen to the full episode down below, but we talk about how much easier it is now for other investors, call Paul Tudor Jones, or famous investors, to now jump into Bitcoin, and why I think other US companies and large corporations will start buying Bitcoin en masse. Check out this clip for a second.
So there's a lot of professional investors, wealth managers, endowment investors who personally own cryptocurrency, but will say it's inappropriate for their institution. And what they're really saying with that is, so anyone who understands risk in the financial concept, anyone who has an MBA or CFA designation, anyone who works in a risk management team should have a full understanding of this basic idea, which is you only care about marginal risk. So I'll explain what that means. So in 1920, there was a belief that it was irresponsible for most people to own equities at all, because equities are risky, equities are volatile. You should only be in blue chip corporate bonds. That's safe. And if you were a wealth manager and you put your investor, let's say you put $1 of your investor's money in any stock or in a corporate bond of a riskier enterprise, you would be on the, and they lost money, you would be on the witness stand, and the judge would say, why did you think that that investment was safe? Mm-hmm. Today, we recognize that's nonsense. If you invest in the S&P 500 index, where you own a basket of 500 stocks, you're not saying that every individual stock is safe. What you're saying is that as a whole, that basket of 500 stocks looks attractive, and that maybe there's a really, really risky company in that 500, but I only have 20 basis points of my money in that one company. And so a basic idea of risk is there's two types of risk at a very high level within a portfolio. There's systematic risk, which means risk that contributes to the risk of the total portfolio because it's correlated to the market. And there's idiosyncratic risk, which is the risk of that company or that asset that has nothing to do with the market. So as a simple example, there's some companies that are very, very tied to the general economy. So a crude oil driller, for example, tends to be basically, if the economy is doing well, usually demand for oil goes up. If the economy is doing badly, it goes down. There's not that big of a difference between crude oil drillers. They're all doing pretty similar things. It's hard for them to separate from the pack. And so most of the risk of owning crude oil drillers is basically price exposure to crude oil and the market as a whole. In contrast, a company like, would be a good example here. A company like Tesla probably has a lot of idiosyncratic risk. It's a bet on, will Elon Musk and his team succeed at what they're trying to do? And will Tesla succeed relative to their competitors? So it matters. If the economy as a whole does well, there are going to be more cars that are sold. If it does poorly, fewer cars. But probably with Tesla, you're betting more on Tesla versus their competitors than on all car companies put together. I don't know if that's the best example. But so in cryptocurrency, what we've seen recently is there's very little diversification benefit. There's been very little idiosyncratic risk in practice. Most of your risk as a cryptocurrency owner is market risk, is the risk of the cryptocurrency market as a whole. Everything went up, everything went down together. I'm oversimplifying, but now cryptocurrency has been almost uncorrelated to stocks, bonds, and gold. I'm not saying for sure that'll continue, but it's a pretty good bet that cryptocurrency will remain less correlated with stocks than other stocks are, or less correlated with stocks than bonds are. So it's not saying the correlation will be zero, but if correlation is less than 70%, you get a wonderful diversification benefit. So I'll put concrete numbers to it, or frame it directly. If you take 5% of your assets in a typical endowment portfolio or diversified portfolio, well, I'll take a step back. If you have a portfolio of equity, bonds, real estate, commodities, most of your risk, you're very highly correlated to the general global economy and to the basically US and global equities as a whole. So even your real estate, even your bonds are pretty highly correlated to public equities. If you take 5% of that exposure and you shift it to a coin, to flipping a coin, if it lands on heads, you double your money. If it lands on tails, you lose your money. That's a very risky bet. It's a coin flip. But because it's uncorrelated, because it has nothing to do with the rest of your portfolio, it actually reduces your overall risk. Yep. Now with cryptocurrency, it's kind of like that coin, but we hope that instead of being 50-50, that there's this positive expected value. So cryptocurrency is a very, very risky bet, good chance of going to zero, but positive expected value. Because it's uncorrelated, it's all idiosyncratic risk relative to the rest of your portfolio. So your risk falls and your expected return rises, which makes it the holy grail of investing. So endowments, pensions should be drooling over cryptocurrency because it's literally, as a portfolio manager, what you're desperate for. You're desperate for a source of uncorrelated returns and uncorrelated risks.
All right, so that was a brief clip of my conversation with Ari, and he's talking about the risks of Bitcoin. And even though it makes sense for a lot of institutional investors, hedge funds, VCs, individual investors, why, even though that makes sense, it's still a scary thing to do. It looks very risky, it looks very volatile. Even though it overall helps your portfolio risk, it's just a leap that most aren't willing to make. But with MicroStrategy doing this first and being very public about it, remember, Michael is now tweeting this out. I imagine he's going to be on CNBC. He's on Pomp Show tomorrow. This is a huge public conviction bet that a publicly listed company is willing to buy $500 million of Bitcoin because they think it's the best thing to do with their company's cash and it best sets them up for the future. And by them doing this and being the first one to put their neck out there, as it makes sense as the best investment, I think a lot of other companies will follow suit. And you guys know what happens if large companies all start buying $1 billion or $500 million in Bitcoin. It's going to lead to higher prices. So I'm pretty excited about that. Hit the like button if you guys enjoyed this little update, breaking down the news, what's going on. And also, while I have you, download the Crypto.com app. They sponsor these daily videos. It's also one of the easiest places to buy Bitcoin. You can use a DCA method, so you can buy every other day or every single week. It's a really nice way to average into Bitcoin. They also have a crypto earn product on their phone. You can earn interest on the coins you hold in their mobile app. Download it right down below. They sponsor it so I can bring you guys the news. Hope you guys are enjoying the video, and I'll see you next time.